So, Mike, how do you respond to the notion that hard money is like bad, that it is kind of like loan sharking? I've heard that around a little bit. I'm not sure if it's true. Obviously, hard
Well,
money, Mike, how do you respond to that?
yeah. Well, it's true in perception because we do get that question a lot. So it's a very common question because I think there's a lot of myths out there about hard money and who hard money lenders are and what they do. I mean, traditionally, hard money is common sense lending, meaning we're not looking at some of the things that bankers and all these other hurdles that come across when you're out there looking for real estate. There's going to be a lot of perception or comments from bankers and other lenders that hard money lending is loan sharking. They're going to come and take your property. All those things, complete miss. Hard money lenders or private lenders, all they're looking for is a good return, just like anybody else in the real estate world. We want to lend the money, get a return, and get our money back. Most lenders want nothing to do with properties. They want to flip properties to be out flipping properties. I think it's just a perception out there, and it's a real perception that people hear, and mainly from other lenders, bankers, some real estate people. They heard that, someone took someone's property, that they're going to charge all these fees and all these other costs. So I think it's just good to go through all of these different myths or things that people are talking about out there that downplay hard money. Because we get realtors, we get investors who are seasoned, all these people who have or have talked to people and have come up with these concerns that hard money lending is loan sharking. And the truth is, typically hard money lending is probably cheaper than some of the banks and what they do and some of the other lenders out there. So hard money used right is a great tool for real estate investors.
I guess where my mind goes is like when I get skeptical of something, I'm like, okay, there's this sort of institutionalized version of the thing. And then there's something that's a little like off the beaten path. And is it fair to say that hard money is that compared to banking and traditional lending?
Correct. Why bankers probably the majority of them have turned a bad eye to hard money is we do what they don't do. We don't typically look at credit scores. They have to look at credit scores. We don't look at income. They have to look at income. We could look at the value as it is instead of what you're buying it for. All three things that bankers or other lenders have to look at: credit scores. What are you buying it for? So that's the current value. We look at what it can be worth, the ARV, and income. We're more worried about the income of the property. Can you sell it than what your income has been over the last 2 years? So it's different than all the bankers use, the criteria. So for them, they're looking at it. Someone's taking that much risk. They must be getting something or taking more. Currently, we're prime and what the banks charge. Most banks right now are charging somewhere between 8.5% and 10% interest on their short-term bridge loans. Hard money is somewhere between 10 and 11%. So banks are 1% or 1 point of their loan for origination, and hard money may be somewhere between 1.5 and 2.5 points for origination.
Okay, remind me what the points mean.
Points mean it's the origination fee. It's what you pay the bank for their fee for doing the service, or a private or hard money lender. So if you have a $200,000 loan and we talk about 1 point or 2 points, that's 1% of the loan amount. So on a $200,000 loan, you're at 1%, that's $2,000. If you're at 2%, that's $4,000.
Okay, so it's the origination fee.
It's the origination fee.
Okay.
Yep.
So it sounds like there's a distinction here between banking and hard money in that there's going to be a lot more caution on their end. They need to know, they're trying to like get data for whether or not you're a trustworthy person, essentially,
Correct.
with your finances.
Yep.
And hard money is looking at, well, we just care if the property cash flows, at least in your case, right?
Yep. Well, either cash flows or has if it's a fix and flip, is marketable, is sellable.
Gotcha. Yeah. Does it have potential to sell and have, have cash flow in the future?
Yep, exactly.
Gotcha.
And I know out there, just like any other lender, there's good lenders and bad lenders.
Right.
But the majority of hard money lenders, all they want is the return. I think the point here is that, it's a little bit foreign to the majority of lenders out there, so they're going to put a stigma on it. But like I said before, hard money and hard money lenders, all they want is a good return. They don't want your property. The last thing we want as a hard money lender is your property, because we're going to have to take it, we're going to have to try to fix it up, all those kind of things. Yes, in some instances, hard money lenders have to take back properties just like any other lenders, but it's typically when someone hasn't paid for 3, 6, or 9 months. They're not doing what they have said. Yeah, they have to protect their money. Hard money lending, unlike banks, are typically real people lending their money. So it's their retirement plans, it's their savings, all those kind of things. So they just want a return so they can live the life that they want. and give you the money so you could live the life you want by real estate investing.
It strikes me that like both in conventional loans or in hard money, that really the issue here is the trustworthiness of the individual businesses or people, offering the loans. So like that's what you have to look at is like, do people trust them? Do people feel like they do good business? And you can find that with big businesses and big banks or with individuals and smaller lending pros.
You see it all the time. Wells Fargo got sued. They've been sued 3 or 4 different times.
Right.
Class action for all their mortgage practices and all their lending practices and everything they do to add on fees. So it's not only small private lenders,
Right.
It's these big banks too. They just have a bigger presence. So the more they talk about something being, bad or you got to watch out. And the funny thing is we could probably help more real investors with loans that make sense. If they have a good property, we don't have to take 3 to 4 weeks to figure out if we're going to do a loan. That's the other beautiful thing about hard money. They might say, hey, well, it's a point higher here, a point higher there. But if you could get a deal and close a deal quickly so you could actually get it and make that $30,000 or $40,000, yeah, you may have to pay another, 1 to 2% over that time frame. But you just got a property. You just got to deal with all the hassles, with all the things that you have to go through to get a bank loan.
Yeah. I mean, it strikes me as reasonable that for a few more percentage points, depending on on the loan and everything, to avoid all that extra caution, all that hassle, and the huge benefit of we're just looking at your property, not your credit score. And what else you're not looking at?
Well, the credit score, and we're looking at the value of the actual property.
Yeah.
So the credit, the income, and the value.
Income, that's what I was thinking.
Yeah.
You also don't typically have to look at income as a hard money lender. That seems like a huge benefit, and it would make sense that there'd be a slight cost. So far, this all sounds good to me. I know we have more to talk about, but if someone is interested already, where can they go to learn more?
Number one, subscribe to this channel because our whole process here is teaching you how to get the best funding for your real estate investing. So if you're looking for best funding, this is a great place to learn because you have to learn what products are out there and all those kind of things. But you can also reach out to us at hardmoneymike.com or email me at mike@hardmoneymike.com. Send us a project. Let us look at it. Let us price it out. And look at the whole thing with hard money, like how quickly can I get the project funded, but then also how quickly can I get out of it? They're going to get me money faster. Like we give money up front at closing, so you don't have to wait for your first draw. All these kind of things to make things faster, easier. We just use a name, Hard Money, because it's been around forever.
Okay, and so hardmoneymike.com, reach out to you there. They can also subscribe to this YouTube channel, obviously.
Yep.
Cool.
Another thing about good hard money lenders is we make sure the projects go fast. If you go to a bank and they have draw processes, they want to send out their person to look at it. It could take you a week to 2 weeks to get everything in line to get the next draw, and then your contractors have to go on to a different job because you're not paying them on time. Where with hard money, it's getting faster and faster. Virtual inspections, all of these things where you could get your money in days to keep that project going. So if you could cut your time to actually finish a project by a month, 6 weeks, it'll probably cost you less. When I say it could cost you less, it could cost you less because of a few reasons. One, we could finance more. So you don't have to borrow it from someone else, family, friends, anything else like that. But with the speed that we do it, we could get you into a deal quickly and we could get you the money as fast as possible so your project can be done. So if you're paying your contractors on time, they're going to be working on your project instead of waiting for a bank to give you the next draw.
Okay, so before we wrap up here, can you recap sort of what are the benefits of, going for the conventional route with a bank and then going for a hard money lender?
And that's a great point. There's a use for both. If you have some time and you have some money and you have the experience, you have 2 years, banks are a great source because you can save that 1 or 2%, especially if you have a project that's going to take 12 to 24 months. That adds up very quickly over that time frame. If you have a quick fix and flip, you're in and out in 6 months. Working with a hard money lender that's going to work off the ARV so you can get the maximum amount on the loan. Working with someone who doesn't care if you just started yesterday, you just started your business, all those kind of things. You don't have the 2 years tax returns. That's where hard money comes in. And credit. We look at credit, but we don't care about your credit score. There's a lot of banks, if you've had a bankruptcy ever, or if you have under a 680, they just won't look at you. We understand investors and their credit goes up and down. We just don't want someone who's in the middle of bankruptcies and doesn't pay anything. But just remember, hard money lenders are not out there to take your property. They're out there to get you into a property so you can make money and then get their money back so they could do another loan for another investor.
Awesome. If I'm hearing you right, the three things that I heard about that are benefits for hard money is if you want to make sure you get a bigger loan amount, the max loan amount you can get. If you may not have the highest credit score, but you can still make it happen. And if you're new to the business and you may not have those 2 years of tax returns.
Yep. And let's put in a fourth, which is speed.
Oh, yeah. If you
Speed
want
to
it happen. Yeah.
close,
Quick
speed to
turnaround.
get
You did
through
say
it.
that.
Yeah.
Yeah. Quick
Like,
turnaround.
Yeah, there are hard money lenders, just like any other lenders, you just have to watch out for. That's why you speak to people in the real estate community, see who's good, see who's not, and then don't worry, like, we don't want your property, and most hard money lenders and even private lenders or banks don't want your property. They're going to work out as much as they can to make sure you stay and profit from that property.
Awesome. Thanks, Mike. For more conversations like this, if you haven't already, be sure to subscribe to the YouTube channel here and check out hardmoneymike.com and reach out to the team. Like Mike said, if you want to look at projects or see what's down the road for you.
Appreciate it. Thanks, Mike.
Yeah.